CME gaps, they're quite mysterious in the world of investing when it comes to Bitcoin. We're gonna talk about what they are and the lie that you've been told. Let's get it. Welcome to BitBoy Crypto. My name is Ben. Today we're gonna be talking about CME gaps, what they are. We're gonna look at the history to find out if people have been lying to you when they tell you that they almost always fill. So here we are on CMEgroup.com. This is the Chicago Mercantile Exchange website. Now, when you look here at this, it's got all kinds of different things that you can invest in here. You guys know my favorite. Everybody knows what I want to invest in. Soybean futures. Let's check out what's going on with the old soy boys. Man, I tell you what, I want to buy some of these right now. Who doesn't want to buy some soybeans? But in all seriousness, when it comes here to the CME, you got to understand this is a traditional market, which means that it closes, it has certain hours. Let's check out what the hours are. So you guys can see here the CME products, and I don't know if this is exactly right because I feel like I remember them opening a little bit earlier on Sunday, but for all intents and purposes, this will show the point. Sunday 5 p.m. to Friday at 5:45 p.m. It's not 24/7, it's like 24/5 and a quarter, something like that is what it actually works out to be, I believe. But the point is they're closed all day on Saturday and they have a close on Friday. So this means that in the world of crypto where Bitcoin is 24/7, and when you look at any Bitcoin chart, you're going to see a variety of charts. You're going to see the 1 minute, the 1 hour, the 2-day chart, but there's never a gap between an open and a close because the entire market is fluid because it's 24/7. But in a world where you have an opening price and a closing price with a gap in the middle, that means that opens us up for what we call the dreaded CME gaps. Now let's get into what some of these are here. We have one gap at $35,270. We have another gap at $28,750. Then we've got a little bitty gap down here at about $11,350. Then we have a big gap down here at about $9,700 supposedly. Now, this is why a lot of people thought that we got down in that $10,000 to $14,000 range, we could push down to the bottom. But what you have to understand here about these gaps is that traditionally these gaps get filled. And you guys can see a lot of these different times here where they got filled. So we had a gap right here. These blue lines are gaps that got filled, as you guys can see here. This gap was around $18,400. This was back in 2020. And boom, look, we filled it right over here much later in September of 2022. You guys can see how long it takes these gaps to fill. Sometimes it takes a really long time. Sometimes they get filled pretty quickly. But the question is, what is this gap getting filled? Let's take this one for instance here. When you look at this, here was the closing price on Friday, and here is the opening price on Sunday. This gap in the middle between these two wicks, this is what we call the gap not getting filled. This means that in between $23,855 to $26,180. Remember, CME, this is an institutional level platform. Banks are using this, hedge funds are using this, Citadel is using this. We'll see in a second. They have orders at all these different levels. They have brokers that have orders. These orders need to be filled. For their calculation strategy, for how much money they make at the end of the year, they're counting in getting certain numbers of orders filled. And when they don't get this filled, the market tends to act like a buoy and pushes down in the case of a gap that's lower to fill it and then bounce back up. So all those institutional orders got filled. So that is what we say when we mean filling the gap. Now, we're only going to go back to 2020 with these gaps here. Now, why? Well, because originally there were the CBOE futures, and those launched in 2017, and those were also gaps that had to get filled as well. But for the CME that we're looking at here, like these haven't been around for too terribly long of a time. So this doesn't go back to 2012 where we can see gaps getting filled or anything like this. I think maybe they launched in 2020, maybe I have that number wrong, but I think that's about 2019, 2020, somewhere around there. So here's the point. A lot of these gaps, as you guys can see here, a lot of these gaps have still not been filled. We showed you some over here. We have 1, 2, 3. We basically have 4 gaps right now that haven't been filled. 5 gaps, counting this one at 19K. When we talk about the $19,990 CME gap, This is what we're talking about right here, right in this zone. This is a new one that has not been filled yet. So when I've been so adamant that we're probably gonna come down here and bounce off of this line and go back up, that's why. Now, here's a really interesting thing. So back when we were covering this story back in 2020, we used to talk about this, there was a number that people put out, 98% of gaps fill. Well, according to our research, for all of the research that we've done between all of these gaps, it's actually now down to about 89%. It's less than 9 out of 10 of these gaps now fill. Why is that important? Well, number one, all the gaps to the upside are always going to fill with Bitcoin. Now, we can't guarantee that, but what we can tell you about that is throughout the history of Bitcoin, every 4 years, we've seen a higher high. So what that means is as long as we continue on that same pattern, these ones on the upside are always going to fill. Meanwhile, when you look at these on the downside, I don't think we're probably at this point ever going to fill a $9,665 gap. I don't think we're potentially ever going to fill this one here, even though it's just a tiny little bitty $25 gap. It makes sense that we may not fill that one, but I don't think we're going to fill that one because I don't think Bitcoin, once we go through another bull run, is going to come back to these levels. So what this means is, since they're all going to fill on the top side, this means that more and more and more of these gaps on the bottom side have not been getting filled. So while we're looking at this number and saying 89% of them fill, well, it's starting to be more like 80% on the downside. Now, 80% is still an overwhelming majority, but it's not the same as 98%, this number that we were lied to about for so many years that people always refer back. And were they trying to lie? Not necessarily, but it's just information transfers where somebody says something that's 98%. When they looked at it, it was true. Someone else says it, someone else says it, someone else says it. It becomes kind of a meme. People don't even understand it's not true anymore. Now, the question is, are we going to fill this $990 gap? It depends. If we come up to this gap, if we fill this gap up here at 28,000, or God forbid, we were to come up to this gap at 35,000 and fill it, we may never get down here below this again. Now, the average price for this year, for this bear market, is probably going to end up being somewhere around $21,000, $22,000. You look at the $19,000 gap that came up this year and you say, you know what? That's right under the average price for the year. Come here and you look at the accumulation year, the beginning of 2020, end of 2019. What was the average price for Bitcoin? Probably somewhere between $7,000 and $10,000. And look right there, $9,665. When it started running, it never came back to this number. Are we going to see the same thing with this 19,000? I think it's definitely possible. Not going to tell you it's probable. I still think it's about a 50-50 chance that we fill this gap. And guys, don't forget, if you enjoyed this video, don't forget to subscribe to the BitBoy Crypto YouTube channel. A lot of y'all are guilty of watching and not subscribing. I'm watching y'all, and you're watching me too. The long and short of it, guys, no pun intended here, is these gaps are important. They do fill most of the time. They don't fill every time. The new number we've got is closer to 89%. It's no longer 98%. I would apply that to the downside. Say on the downside, it's more like 80%, and the top side, it's more like 100% to what we've seen so far. So take that information and do with it what you will. If you want to look up this chart on CoinMarketCap, it is BTC1 exclamation point, and you can find it from there. That's all I got. Be blessed. BitBoy out.